Hello everyone and welcome back to Explain the Charts. Today, September 15th, 2025, we're diving into an in-depth analysis of BTCUSD, examining both the latest news and crucial chart data. Bitcoin is currently making headlines, pushing past the $115,000 level, and much of this momentum is tied to significant macroeconomic developments. News reports indicate that TradFi institutions are set to ramp up their Bitcoin allocations by year-end 2026, signaling strong long-term demand. Spot Bitcoin ETFs have recently seen solid inflows, with $642 million recorded on a single Friday, highlighting renewed institutional interest. These sustained inflows are increasing the likelihood of BTC breaking above the key $117,500 resistance level. Looking at the daily chart, we can see Bitcoin's broader trajectory. The price action since early August has shown a clear uptrend, recovering significantly from previous lows. This resilience is noteworthy, particularly given the volatile market conditions. Now, let's narrow our focus to the past few months on the daily chart, specifically from August 1st to the present. Here, we clearly see the impact of macroeconomic data driving price movements. Bitcoin surged past $114,000 following lower-than-expected U.S. Producer Price Index, or PPI data released on September 10, 2025. The cooler PPI print boosted market sentiment, increasing optimism for potential Federal Reserve interest rate cuts. This strong bullish candle on September 10th and 11th, moving from around $111,530 to $115,540, directly correlates with that positive news. The price action since then has generally held above the $111,000 mark, which acts as a crucial support level. This level also served as the top of a previous consolidation zone that held for nearly a month. On-chain metrics also support this uptrend, with exchange wallets showing outflows, suggesting long-term holding intentions and a reduction in available supply. Miners' reserves also hit a 50-day high on September 9th, indicating they are holding their coins rather than selling. This collective miner accumulation pattern historically preceded a 48% rally in 2023, offering a bullish signal. We are currently trading around $115,393, just below the overhead resistance identified at $117,500. Clearing this level could pave the way for a run towards the next targets at $124,474 and potentially even $130,000. Switching to the 1-hour chart, we can gain a clearer perspective on the immediate price action following the PPI announcement. Observe the significant volatility and the sharp upward move around September 10th, corresponding with the news release. After the initial surge, Bitcoin entered a period of consolidation, hovering around the $115,000 level. This tight range indicates that buyers and sellers are currently in a standoff, awaiting fresh catalysts. The relative strength index is at 54.76, suggesting there's still room for further upside before becoming overbought, reinforcing the bullish sentiment. However, any dips in this range would likely find strong support around $111,000, which has proven its strength on the daily chart. The volume on these recent upward moves has been substantial, indicating strong buying pressure accompanying these rallies. The current resistance at $116,000 on this shorter time frame is being tested repeatedly, showing buyers are trying to push higher. A sustained break above this level could ignite another leg up. Zooming in further to the 15-minute chart, we get a granular view of the very latest price dynamics. In the last 24 to 48 hours, Bitcoin has shown slight downward pressure, but has found support around $115,100 multiple times. This level is critical for short-term bullish continuation. We can see tight trading ranges, indicative of reduced liquidity and increased sensitivity to upcoming news. For short-term traders, watching these micro-trends for breakouts or breakdowns will be key. A break above $116,000 on this time frame could signal a rapid move towards higher resistance levels. Conversely, A drop below $115,100 could see a quick retest of the $114,500 region. The market is clearly in anticipation mode, reflecting the caution ahead of the critical CPI data expected today. Keep an eye on transaction volumes during these micromoves. Higher volumes accompanying upward moves would be a strong bullish signal. Recapping our analysis, Bitcoin is currently trading strongly, fueled by institutional interest and favorable macroeconomic indicators. Key immediate resistance stands at $117,500, with further targets for bulls at $124,474 and $130,000. A breach of $117,500 with significant volume makes a move to $124,474 quite likely, probably around 70 to 80% probability, especially if the CPI data comes in cool. Immediate support is found at $111,008, reinforced by the 200-day simple moving average at $102,066.56, offering a sturdy floor. A decisive break below $111,008, perhaps due to a hot CPI print or a disappointing Fed decision, could see us testing the $102,000 region. A 60% probability if such negative catalysts occur. The overall bullish trend remains intact as long as we hold above the 200-day average. Crucial events to watch are the U.S. Consumer Price Index report expected later today, September 15th, and the Federal Reserve's rate cut decision on September 17th, with 91% of traders expecting a 25 basis point cut. Be aware that if the market expects a 50 basis point cut and only gets 25 basis points, a sell-off is possible, so manage your risks accordingly. Long-term, analysts like the Winklevoss twins are predicting Bitcoin could reach $1 million, suggesting immense upside potential. However, always consider macroeconomic risks that could cap gains in the short to medium term. Stay vigilant, analyze the data, and trade wisely. Thank you for tuning in to Explain the Charts.